Hyman. Well, we had a very promising economic indicator today, as we've been reporting. Sales of new homes in March jumped by 27%, the biggest jump in 47 years, although we should note the increase was over a weak February number in comparison. Joining us now is Dean Maki. He's Barclays Capital chief U.S. economist and one of Bloomberg's best. That means we bring you only the best people on the economy. We've crunched the numbers to find the most accurate forecasters in the world, and Dean fits that bill. Dean, thanks so much for joining us. We appreciate it.
Thank you for having me on.
So the big question here is, as we look at this 27% jump, how much of that was people trying to scramble in before that tax credit expires, and how much of an increase are we going to continue to be able to see?
We think a good part of this was probably people scrambling to beat that deadline. They have to offer a contract by April 30th to qualify, so people are doing that at this point. At the same time, though, I'd highlight we think that the underlying trend is positive here. So you're seeing some volatility with the tax credit, but we think that that trend is certainly upward.
So you don't think, for instance, that we'll take a step back next month after this sort of a number?
I would expect April to be quite strong as well. Then probably we do step back in the May-June period as some of those sales were front-loaded. But I think after that, then we continue on the gradual upward trend that we've been on.
But Dean, there's still that dark cloud hanging all over this, and that would be foreclosures. How is that going to affect the housing starts and in particular new home sales?
Well, it's certainly making new home sales and housing starts lower than they otherwise would be. That effect, certainly in the data, it will continue to be. Despite that, though, we are seeing starts and sales pick up, especially in areas that don't have heavy foreclosure inventory.
Such as?
For example, think of a state like Texas, where there isn't the massive overhang there are in some other states. That's the kind of place where we're seeing starts and sales rebound.
Now, in terms of inventory, are we getting towards a more normalized level here? And then where does that start to spur some actual new construction at a higher rate?
Well, right now, new home inventories are at the lowest level since the early 1970s. So builders have done a great deal to bring those down. That has already turned out to be a bottom in housing starts. So housing starts are on an uptrend right now. That is set to continue because inventories are so extremely low.
Dean, I'm curious about household formation. That is, people getting together, getting married, or just coupling up and buying homes together. This is something that waned a little bit during the recession. Is that starting to improve, and how much is that going to then spur home sales going forward?
That certainly does happen in recessions. People move in together, they move back with their parents if they lose their job. That probably is still going on. We don't have month-to-month data on it, but we would expect as the expansion continues to take hold, that household formation number picks up again.
Dean, might I ask, because as Julie was mentioning, there was an audible gasp in the newsroom after this number came out today. Any possibility that we're also going to see a jump in April's numbers as well?
I think that is a good possibility because that tax credit goes away at the end of the month. If you're on the fence about buying, if you think you're going to be buying soon, it does pay to buy before April 30th.
You know what, Dean, I want to talk about some of the other economic data that we got today, notably the business spending numbers as part of durable goods. We also, however, have had a little bit of mixed news in terms of companies and what they have had to say about business spending. So what's your projection for the trajectory of what business spending is going to do for the year?
We do think that business spending on equipment and software already is in a substantial upturn. It grew almost 10% in the second half of last year. We think that kind of strength continues throughout this year. The profits, when you look at them in aggregate, are quite strong in terms of growth rates. That's setting us up for good growth in business investment. In addition, we think businesses simply cut back too much during the downturn in anticipation of a much worse outcome than actually happened. So we're seeing some of that reverse as well.
Dean, I'm sorry, but when you see are you telling us then, at least from that perspective, it was a lack of confidence given what was on the horizon?
I think there was a real real crisis of confidence in addition to the financial crisis. We had our financial and political leaders talking about a good possibility of another Great Depression occurring, and firms saw their own sales fall off. So to be prudent, firms cut back substantially in anticipation of a depression-like outcome. That didn't happen, and now spending is picking up.
Dean, I saw one report by a tech analyst going into IBM's numbers that talked about the risk that perhaps after tech IT managers and purchasing managers were trying to catch up from the effect you're talking about, that maybe we'll see that peter out in the second half of the year. Do you think there's a risk that will happen?
I don't think it will peter out that quickly. I think there's not only did firms overcut, but they haven't been investing for a while at the rate that they should have been. So in my view, this is going to go on for some time. And because other factors like consumer spending are going to be growing strongly, businesses have to continue to invest just to keep up with demand going forward.
Dean Maki, Barclays Capital Chief U.S. Economist, one of Bloomberg's best. Dean, thanks again for joining us.
Thank you.